Hello everyone. Welcome to this week's weekly market view for Monday, the 12th of August 2024 to Friday, the 16th of August 2024. My name is Vishal. Let's get started. All right, let's start off with the Nifty chart, and I'm going to open the Nifty daily chart. I'm just going to make sure that there are no markings on the chart. So we are going to start the analysis from scratch. There was some weekend news, but I think the market has probably already discounted that, and we did have a little bit of a bearish opening today, and then the markets started pushing to the upside. Now, if you look at this entire area over here, we are seeing a very, very strong support at 24,000. In fact, now the support level has moved up even by 300 points towards 24,300. So seems like in the short term to mid term, 24,000 level will not be an easy level to cross. However, on the upside, we do have a level of open interest, which is 25,000. And this will be a key level to watch out for in case if the market decides to push further to the upside. So let's go ahead and plot this level. And this is also nicely lining up with a supply zone. So I'm going to be keenly watching this level just to see whether if there is any profit booking that comes along these levels. If you are looking for a good level of demand, we have two levels of demand here. We have one level sitting inside this entire area over here. That's more visible on a 240-minute chart. So let's go there first. And or maybe even we might have to go a little bit on the smaller time frame. Let's go to the 240 minutes first. Yeah. So pretty much you have this rally base rally level of demand sitting, and then just below that you have another drop base rally as well. So these will be the key areas because this is also within the weekly time frame. And in case if this level breaches, then along 23,000 odd levels, we also have another level of demand, which is also a very strong level of demand, and that's a little bit lower. So these are the two key levels in case if there's some negative news that probably pops up, and then that drags the market to the downside. But I'll be a little surprised if 23,351 level breaks to the downside. So we might expect to see a little bit of a consolidation or a range bound movement in the Nifty for this month, unless and until Nifty makes an all-time high, or then these levels start breaching and falling to the downside. All right, let's move on to the Bank Nifty now, and let's look at it with the perspective of open interest. So as we can clearly see, 52,000 has the highest open interest, and 50,000 is acting as a strong support. If we now line up demand and supply along with the open interest levels, then there is a key level of demand sitting on Bank Nifty, this rally-based rally. The prices have not yet come here. So who knows, any bearish news can probably bring the prices here, and then we might see a bounce coming in. And to the upside, we do have a gap level, which is this rally-based drop. This is going to be a key level. And right now, the markets are actually reacting from this area over here, right? So this area is also confluencing with this 52,000 level. So it'll be interesting to see what does Bank Nifty do once it reaches this level. Until then, just like the Nifty, we are expecting to see a sideways consolidation. And maybe we can say that with a slightly bullish view. Okay, so markets might push a little bit to the upside because they have been continuously taking support at this 50,000 high. All right, let's now move on to the financial services, and let's see what the financial services are telling us. So the Nifty financial services, more or less like the Bank Nifty, has also been more or less consolidating. 22,800 is going to be a key support for the financial services. And as you can see, there is no clear level of demand over here. If there is any decent level of demand that we see over here, that's just sitting right here. So demand is very, very far away from current market price. But like I said, if Bank Nifty takes support at that demand level, then obviously financial Nifty services will also start to move up. On the supply zone front, we have this level of supply, which is again nicely coinciding with the Bank Nifty supply. So it'll be very interesting to see what's happening there. And there is one more level of supply, which is a tested level of supply, very similar to the Bank Nifty level, again coinciding with this 23,500 open interest level. So even if the markets push to the upside, it may not be very, very easy for the markets to break these levels and maybe print a new high. So we might again expect to see a consolidation to a slightly bullish movement in the Nifty financial services as well. All right, now let's move on to the Bank Nifty and let's remove all the tools over here. So our charts look nice and clean. So here we have, clear-cut open interest levels over here, 12,500. Today also it has acted as a strong support on the MidCap Nifty, and the highest resistance level or the biggest resistance on the MidCap Nifty is at 13,000 levels. So generally, when there is an open interest level confluencing with a level of supply, that's where the high probability turning points on the markets are. So this is something to watch out for. And if you look at the level of demand, there is no clear level of demand. Maybe there is something sitting over here on the daily chart within the MidCap Nifty. So it'll be interesting to see what happens over here. Okay, so let's keep a close watch. Again, if you ask me what is likely to happen, unless and until prices come to these major supply levels, we are not going to see big moves coming in. So we might just expect to see sideways again to some kind of a bullish movement on the mid-cap as well. All right, let's now move on to the Sensex and let's see what the Sensex levels are telling us. I'm just going to refresh the graph over here. Okay, now if I just zoom in a little bit, so you can see Sensex is slightly behaving a little bit differently, more or less like the Nifty. So we can see a nice supply zone. However, there is no open interest lining up with this level of supply, but it is going to be a key level of supply because it's a level of supply from where the prices gapped down and created a new low. So any push into this area will probably expect to see, we might expect to see more selling pressure coming. But before even prices reach towards 81,300 odd levels, they need to breach 80,400 and 80,500 levels. So there might be something a little bit lower, and even if there is no supply zone, maybe markets might not be able to cross this area. If you look at the demand zone front, what I like about the Sensex, which is not present on the Nifty, is that we have these levels of open interest. And in fact, we have all the three open interest lines lining up within this area of demand, which is indicating that this area is going to be a very, very strong support for the Sensex. All right. So again, expect to see a little bit of a consolidation to a slightly bullish move to the upside. If 80,500 crosses on a closing basis, we might head even further up towards this 81,300 odd level. So keep a close watch on Sensex for this week. Let's move on to Bankex now. Let's remove all the tools. And very similar to the Bank Nifty, the Bankex is also more or less behaving in a similar way. It has taken support at this area of 57,000, very clearly seen, but it also has a highest open interest level at 58,000. Now, this is also because of the fact that today is expiry. So these might change when you come back and revisit these charts tomorrow. Okay. So for the timing right now, if you ask what's for today, then we can say that Bankex is going to remain in a very, very tight range between 57,000 to 58,000. All right. And now as we speak in the live market itself, the open interest level has changed now. So now the range has even become more tighter because as expiry is coming closer and closer, the range is getting more and more narrower. So 57,500 is the new put open interest level, and 58,000 is the highest call open interest level. If we come back tomorrow and revisit this, I will not be surprised if the open interest levels move further up. So we might have something within this area over here, which is this rally-based drop, also around number 60,000 odd levels. And then we also have this level of demand, which is also nicely confluencing with the level of demand on the Bank Nifty. So we got to see how these levels play out. And if both these levels come together at the same time, then it's going to be a very, very interesting scenario to see a potential bounce coming out of these levels. If we look at the Bankex now, again, consolidation. So slightly bullish move expected on the Bankex in the coming days, or we might even get to see a little bit of a consolidation coming. So this is pretty much with the indices. Now let's look at the heavyweights. And let's first go to Reliance and let us see what Reliance is doing today. So let's go to the Reliance chart. I need to probably change the chart to NSE. I selected BSE. Yeah. So let's change it to NSE. And yeah, let's look at the key levels on Reliance. So Reliance is taking a nice support at this area. We have this level of demand, and it is nicely holding on to this area. So if prices do tend to hold this area, 2900 is going to be a key support for Reliance. Prices will not find it very, very difficult or hard to move towards 3000 levels in the coming days. We do have a supply level here, but I think the better supply is sitting at the top, right? So this might be a little bit of a temporary supply. Again, it's lining up with an open interest level. So again, we might tend to see a small reaction, but the bigger chunk of supply is definitely at the top. So what can we expect from Reliance? We can expect a slightly move to the upside because it is reacting from a higher time frame level of demand. Let us now move from this chart to HDFC Bank, and let us see what HDFC Bank is up to today. So let us wait for the charts to load. All right. So like I have been continuously saying that 1600 has been a very, very strong support for HDFC Bank. And it has also been nicely sitting within this area of demand here, right? So you can just mark this area this way. Yeah, this is the area of demand. So nicely sitting within this area of demand, nice consolidation. And now as expected is pushing to the upside, right? Now, what could be some of the barriers for HDFC Bank? 1680 will be the first barrier. There will be some profit booking coming in there, or even 1700. Any close above 1700 will probably push HDFC Bank even more stronger to the upside. And maybe the next target on HDFC Bank will be 1800 odd levels. So keep a close watch because these are the stocks which are actually going to govern the move in the indices going forward. All right, now let's move on from the world of stocks into the very interesting world of commodities. So I'm going to load the commodity layout here, and then we will do the same analysis on commodities as well. So let's load the commodity charts. And as they load, perfect. All right. So this is not the commodity chart. Let me change this to gold. I'm just wondering what happened. So let's change this to gold. This is going to be futures. I think on the chart sheet there, I did not want that. Okay, so 1 second. Let me just close all these charts here. And let me right click on this chart. I do not want graph linking, so I'm going to remove that. And now I'm going to reload the graphs. Okay, so let's load gold here. Perfect. So now we have the gold chart. We have the silver chart. We have, okay, so we need to have, not sure why the charts changed here. So let's load copper. Let's change this to crude oil. Yes. Perfect. So now we have all the commodity charts together. Let's start with the analysis on gold. And as you can see, gold came crashing down. And however, now it's taken a nice support at the 68,000 open interest level. So seems like in the near short term to mid term, 68,000 is going to be a key level on gold. We have a level of demand sitting over here on the daily chart. Let's go back to the weekly. Yes. So this is the level of demand. And I'm going to be very, very keen to look at this level of demand if the prices do get there. It's a little bit far away from current market price right now, but it'll be an interesting level to watch out. On the supply zone front, we have this very, very strong level of supply from where the prices have fallen. And right now, gold we can say is slightly bullish because it has taken support at this level of 68,000 and trying to push to the upside. So there are no open interest levels lining up over here, which means that price may not find it very, very hard to move to the upside and eventually even go ahead and break the prior highs here. Let's move on to the next commodity, which is silver. So these are the markings from last week. As you can see here, how silver has played out. This was the highest open interest level lining up within this key level of supply. And prices then reacted from this area, reacted towards the supply area, went down, slightly breached this area, but did not close below the level of demand or below the open interest level. And now they are taking a nice support, and there are these nice open interest levels lining up within this area of demand. So what this tells me is that if silver is going to give a big move to the upside, then more or less it's eventually going to remove this 85,000 odd levels and start moving towards 88,587 odd levels. So the view on silver is also bullish right now because obviously in these areas it's too low to even go ahead and sell silver. So I would rather wait for a nice retracement into these upper levels, and then probably we could see some shorts coming in. The better levels of demand are sitting below here, so still a little bit far away from current market price. But let's see what happens with silver. Let's now move on to copper. So copper has been very, very interesting. So as you can see, the beauty of demand and supply is plays out so well when you look at the higher time frames, and you can see here how copper has come into this level of demand, and it has just halted over here. So what can we see with copper? We can see a nice move to the upside. So right now, it's not at all a good time to go short on copper. And when institutions are moving the price, they are not going to straight away move the price. They are going to start accumulating, right, before they make the big move. And we have seen that on HDFC Bank. Right now, we are seeing the same thing on copper. So we are seeing this consolidation. If we see another consolidation, maybe for 1 or 2 days, we are expecting to see a very, very strong move coming in copper. And because of the higher time frame area of demand, the view is slightly bullish on copper than bearish. So all the commodities are actually lining up for a more of a bullish move as compared to the other ones. Okay. So we looked at copper. Now let's look at crude oil. Let's refresh the graph here. Let me just choose the correct contract. We have not chosen the correct contract for crude. Let me choose crude oil. Okay, perfect. So now we have the chart of crude oil. And let's go back to our previous markings. As you can see, we had this level of demand here. Price came into this level of demand, gave a nice bounce. So if you were involved in this trade setup, definitely this was a good move to catch. See how well the open interest levels are, working out over here. Like this would have been a great exit if you were looking at the open interest levels. Now what the price has done is it has created a new low. Okay, so now we have to remove this level of demand because now this is not going to be an area to watch out for. So right now, because these prices have created a new low, what is also interesting to see is that if I draw a horizontal line, you can clearly see how if someone had put their stop losses below this drop-based rally, all those stop losses would have got triggered, right? So this is more like a stop hunt, which has actually taken place on crude oil. And generally, when a stop hunt actually takes place on any stock or any indices or let's say commodity, currency, gold, silver, whatever, the moves are even more stronger because what have the institutions done now? They have probably stopped out all the retailers over here. They have now created a very, very solid position, and now they want to turn and move crude oil to the upside. So I will not be surprised if crude oil gives a very, very strong move. The supply zones are more or less sitting over here, 68, 61 to 7,004. There is a small open interest level over here, but I'm not too concerned or key about this level here. But definitely a level to watch out for will be 6,600. Any close above 6,600 will probably give a very, very strong move in crude oil. So if you look at all the commodities thus far, they are all indicating a move to the upside. Let's look at natural gas now. This is going to be the last commodity. And let's look at the weekly chart first on natural gas. So natural gas has just been consolidating, moving up and moving down. This is your weekly level of supply, and more or less this is your weekly level of demand. So right now we are reacting from a weekly level of demand. So it is obvious that we do not want to go short on natural gas, because every time if we happen to go short, we are more or less going to get stopped out on those trade setups, right? So we are nicely now reacting to this area here on natural gas. Very, very interesting rally, base rally. Prices came here, slightly pierced this level, but because we had that weekly level of demand sitting below here, prices took nice support. And now the first target from this level is going to be 200. The next target will be 210 and 220. So again, we are likely to see a little bit of a more bullish move on natural gas also. All right, so that's it from me, guys. I hope you enjoyed this analysis for this week. Looking forward to see you all next week with some more analysis on stocks, as well as the indices, as well as the commodities. Have a great week, everyone. Take care. Bye-bye.
This should not be treated as a recommendation. Please conduct your own analysis or consult a financial advisor before investing.